Hey everyone, welcome to tonight's webinar. I'm really excited about this webinar. We've had a lot of success swinging stocks lately, and this webinar is going to be talking specifically about the strategies we've used for that success in the stock markets. Super excited about this one. It's going to be called Swing Trading Strategies. I think we're like 14 out of our last 15 on wins, almost 100% profits on our swing trades. It's been insane. So very excited about it. As always, I got to talk real quick about this, kaftax.com. Seriously, I promise you, you won't find anyone better to do your taxes than our CPA. He's amazing, and he'll do it for less than other people. Just trust me, get your free quote. It'll be worth it. Okay, let's go ahead and dive into this a little bit more. So here's our recent track record on some swings. Now, I will say, as a disclaimer, I'm in one swing still that I'm currently red on that I don't have posted here because it's not realized yet, and so I don't have charts, and it just at this point isn't worth breaking down yet. But it is a red trade. But I mean, look at this. This is insane. Total profits of over 80%. This is over the course of about a month or so, I would say. Maybe 6 weeks, actually. Because I'm very selective about, I don't just swing something every day. It's not like it's, 2-3 swings a day. No. It's hard to find the right swing setup. Okay. Trust me, they don't come every day. If you're swinging something every day, like for a short-term swing, you're doing something wrong. These swings are, they're hard to find. And we're going to talk about how to find them. But just take a look at this. These are all real trades. You will notice the only catch here is that when I say if it ended up hitting our $21 price target, that means I took profits early. So you can see $21 was our original price target. I took profit 1980. This was basically a break-even trade. But anyways, it was still technically a winner, but with your potential, it would have been a potential 6.2% winner. Similar thing with this. I took profits a little early. You'll notice I often take profits early just because I absolutely love profits, and they're not profits till you lock them in. So my biggest weakness as a trader, without question, is locking in profits early. Anyways, this is our recent track record, and I want to talk about some of these things that we find. Okay, this is going to be a nice short webinar. I just want to talk about some of the basics that everyone needs to have ingrained in their mind when preparing to swing a stock. Okay, here's the first stock I want to talk about. It's going to be this PTGX. See this down here? Actually, let me pull out my little cool laser pointer. You should be able to see this better. Okay, see PTGX right here? Huge swing trade for us, almost a 10% winner. This is the first one I want to talk about. In my opinion, the best way to learn these patterns and strategies is just using real life examples. Okay, and even though I'm going to talk briefly just about some basic strategies here, when you're in the chat room with us, when you come to our retreats, that's when we really dig deep and get super dirty and nitty gritty into things. On the morning voice channel is a huge learning opportunity. I also go on the voice channel in the afternoon to talk more about things and explain why I want to swing certain things, etc. This is PTGX though. Okay, this is over about a year and a half. Okay? Each one of these candles represents 1 week. Okay. Now you'll notice when I'm doing the swing trades that I really legitimately did look and watch this and plan the swing trade based off of this chart, a chart over the last year and a half. Okay, and look at the fall through. We bought it over 1190. Why did I buy it over 1190? If you've been watching my videos, if you're in the trading room, you already know. Take a look at this resistance point. This is the gap fill point. This was the high, 1190 right here. Huge gap fill all the way up to $21. We love gap fills. If you ever get a gap fill breakout just like this here up and over 1190, oh, just love it. It's like my favorite setup in the world, especially for swings. I love swing gap fill breakouts. It's seriously like my favorite thing. Okay. So now how did I find this? Okay. I want to talk a little bit more about it. Notice this point here at 1190. I put an alert, okay, in my trading platform to tell me and say, hey, PTGX is getting close to 1190. You want to pay attention because there's a huge gap for it to fill over 1190. I put in that alert probably a year ago. I don't know, maybe 8 months ago or something like that. Totally forgot about it, okay? So then one day I'm just sitting there and my alert goes off, and because I had done the work 8 months ago and prepared for whenever this breakout over 1190 happened, all I had to do was put my buy order, and boom, this thing zoomed up to $13. Actually went even higher up to $14. I want to break it down. This was the day that we actually entered the trade here, here, right, over 1190. So, I mean, I was chilling. Look, the stock's at $7 the week before, okay? And here I am. My alert goes off because I did my work ahead of time. All I have to do is trade the gap fill breakout. It actually hits as high as 1436. I took profits the next day, though, or 2 days later at 13. I took them right here. So entered the swing here, 1 night, 2 nights. There's my take profit, 1303. You can see if I was patient, could have paid off a lot more. But I also want you to notice a common trend with all the stocks I'm swinging. Do you see this very upward, very bullish momentum? It's a very common trend. Okay, it's not a coincidence that nearly every stock I swing has a chart that looks like this. Very bullish, very upward momentum. And we'll talk more about that specifically. Okay, just a reminder. Here was a stock. I traded a gap fill breakout over this area, previous resistance into the gap, filled the gap about halfway. I mean, it was just beautiful. Okay, so that was PTGX was a beautiful, beautiful swing trade for us. And here it was on the shorter range. Only took 2 days for us to hit it, take profit, even continued even further later on. Okay, but that's how powerful gap fill breakouts can be. Now, one thing I want to talk about here, see here, I say no previous day's range. Okay, so many people ask me, well, when do I take my profits? You know, how fast is this stock going to move? Right? Well, here's the best advice I can give you. The best advice I can give you is to look at the previous day's worth of range. This stock went from $10 to $11.50. That's $1.50 worth of range in 1 day. The day before that, it went from $9.50 to about $10.50, about $1 worth of range. It's a little tighter here, right? But this is where the real momentum kicks in, that we start to surf. It's like riding a wave. It's like surfing, right? You don't surf the wave when it's nothing, right? When there's no momentum or no catalyst or nothing and it's just flat, you can't surf a wave. It's impossible. There's no way. There's no wave to run. You have to wait for that wave to actually get started here. And this was the start of that wave. We got this nice, nasty rip curl. Kelly Slater would be proud, and we surfed that thing all the way up to $13. Does that make sense, though? We're not creating something out of nothing. We're just riding what's already there. We're just riding that continuation there. Okay? This is that wave that we want to ride. Again, notice that there's no way in hell I enter this stock for a swing back here at $8. Right, when it's doing nothing. Now, in hindsight, sweet, buy here, sell at $14.36. Oh, perfect, trading so easy. That's not how it works, okay? It's not how it works. There's no clear signals at this point, no clear signals at all. You have to wait till that wave. You can see this wave and this momentum and this volume slowly picks up until boom. Hey, let's go ahead and ride this bad boy for some profits. Hit our price target. So that's something we really want to pay attention to. Is the wave, okay, that's involved with all this, is the momentum. I talk about that a lot when swinging stocks, and I'm going to talk more about momentum in a second. Okay, next stock I want to talk about, this was ACB. Okay, this was an awesome trade for us. We bought this over $9. I ended up selling it in after hours right here. Okay, take a look at this sell in after hours. I took profit super early. I ended up pulling back the next day. We could have rinsed and repeated this and traded it back over $9. And guess what? We did, or at least I wanted to. Okay, we bought it first over $9 and a second time over $9. And look at this thing carry all the way to $10.38. Okay, this is just a beautiful thing. We talk about rinse and repeats all the time. If you bought over $9 once, believe me, you're probably going to want to buy over $9 the next time too. In this case, you would have gotten filled on this tiny. See that little candle barely go over that line? It was initially kind of a fake out, but look at the delayed fall through. Okay, that's a rinse and repeat strategy. Also very good for swings. Okay, but now you might ask, why did I buy this over $9? Well, this is catalyst related. Okay, and I'm going to talk a lot about catalyst. By the way, this stock PTGX technically did not have a news catalyst. This was purely momentum and just a chart breakout on a gap fill range. Notice the gap fill. Okay, there was not technically no news catalyst was released. I'm sorry. Yes, there was. There was the earnings, but it ended up being 4 days later than I finally got in. But it was the earnings release that started the wave. So this did have I stand corrected actually. This did have a catalyst, and it's very, very rare that you'll ever want to take a swing that does not have a fresh catalyst, does not have the momentum, and does not have the technical breakouts. In this case, PTGX had all of them. Had the catalyst with the earnings, had the momentum with the days leading up, and then it had the chart technical breakout up and over 1190 gap fill. That's just A plus times 150 million. Okay, it's A plus, A plus, A plus. Everything about that has those three main criteria. Okay, next here, ACB. They released news this morning. So boom, check. We have a catalyst, a powerful bullish catalyst. That's the first check. Okay, next, let's check the momentum. Well, notice this thing sold off heavily all the way from highs of 920 down to about 850, and then it bounced midday. So as we were heading into close here, this absolutely had momentum. This had 3-4 hours worth of momentum to the upside. Boom, check that off the list. This stock has momentum to the upside. Again, this is the wave that starts, and all we want to do is now ride the wave. I ended up trading really conservatively, took profits here. But this is the type of example that you're looking for. This is a technical breakout over a previous. I wish I would have actually broken this day up a little bit more so you could see better. But notice this red candle right here. Notice it getting denied at $9. That was basically the previous major resistance level. It actually bounced off that $9 level multiple times, so you could see it was a very clear resistance level. Now, for going on further, remember how I said you can rinse and repeat these? I mean, look at this. $9 is resistance here, and it's a breakout pop area there. It's resistance here. The next day, it's a huge breakout pop area. Even here, look at this $9 area ended up being resistance and led to a huge pop today, okay? So pay attention to rinse and repeats. All right, let's talk about the next one here. TGT, this is target. Let's go through our checklist. First thing, what's our catalyst? Boom, strong earnings. Check that off list. How about momentum? Well, notice that again, the morning sell-off down to 74 almost, and it got bought up all into close. That's the type of momentum we're looking for, a very nice, strong close. I'm going to talk more about what specifically to look for with these strong closes, but that's exactly what you're looking for, a strong close, and I'm going to talk, like I said, more specifically about that in a second. Now, notice, this actually originally faked out over $74. You can tell this was middle of the day resistance. It did end up breaking out at the perfect time. I'm going to talk about time frame and what time of day you want to be looking to enter stocks too. So this is a perfect example of that. It fits my criteria perfectly. But notice it actually originally faked out. So if you took this, you were actually down on this. We bought this over 76.50. You were down on this overnight. Like, oh, this sucks. This is going to be a losing swing trade. But look at this pickup, this delayed pickup, okay? Delayed reactions, delayed breakouts, delayed breakdowns, etc. are a very common thing. Okay, and in this case, it gave us great momentum the next day. I took profits pretty almost at high of day actually. What were my profits? Let's go look. I think it was 77, like 30 or something on this TGT. Yeah, 77.39. That was almost high of day. Okay, now there's no trick to selling at almost high of day. I got lucky. That's the honest truth. If anyone sells a high of day and claims it's pure luck and skill, they're lying to you. Okay, honestly, if I sell too close to high of day, I usually am mad about it because it means I was too aggressive. It means I should have been more conservative. But anyways, got filled the next day for almost a full dollar share of profits. In here, out here, a beauty. Now, why do I carry out this line? I just want to show you guys how important levels of resistance and support are. If 76.50 is an important level of resistance here and it's a breakout level, it's going to be later on. Look, the stock actually gets denied here in pre-market, gets denied here the next couple mornings later, and then look, ends up being a huge breakout level, right? Okay, these levels are so important. Rinse and repeats are key. I could have rinsed and repeated this again over 76, right? Guess what? Down here, it pulled back. I could have rinsed and repeated it right here again over 76. Pulls back, pulls back, pulls back. Guess what? Next morning, boom, could have rinsed and repeated it again, okay? And even again here, now you probably, these would have been, there's not a lot of range there, and we're getting more further and further away from our original catalyst that started the whole wave, right? But you get the idea. Okay, so that was TGT. Next up, let's talk about ASND. This was a fun one. Okay, this was a fun one. Notice the huge gap up from $68 all the way up to $115, $120. This was nearly 100% move overnight. Okay, they announced some very critical, very important positive drug news. The stock just absolutely soared. Now, I'm going to say something that's going to be contradictory here. This was a biotech play, and I swung it. Later in this video, I'm going to tell you to never swing biotechs. Okay, I know that's contradictory. It is, and once you get more experience, there's times when you can play with it. But just from a starting standpoint, do not swing biotechs, and I'll talk more. Well, actually, I'll talk about it right now. The reason why I don't swing biotechs is this right here. What these biotechs do is they announce positive data, positive drug news, positive phase 2, phase 1, phase 3, phase this, phase that. And what do? They now have to raise money for the next phase. Okay, so if they release positive phase 1 data or positive phase 2 data, that's great. Everyone's so happy. Look, the stock jumped from 68 to 120. But guess what? This company has to fund a whole nother round of clinical trials. Where does that money come? It comes out of your pocket as a shareholder. They do an offering. They sell tons of shares for 20, 30 million to fund the next round of clinical trials. Okay, that's why so frequently when a stock wins FDA approval, the stock actually sells off because everyone's like, oh, shoot, they have FDA approval, but now they have to fund their marketing campaign to actually sell the drug. What are they going to do? They're going to do an offering. It's going to drop. That's why we see that so frequently, and that's why I don't want you to swing biotechs. Now, I broke my own rule here because, and you know what? I'm not even going to pretend like I'm just some super genius smart man. I just made an exception for this, okay? And it ended up paying out in a major way, but just as a general rule of thumb, do not swing biotechs here, okay? However, with this stock, the momentum was so strong, okay? The news was such a surprise to everyone. Trust me, stocks do not jump 100% on it, especially a large, high price. This is a larger cap biotech. They won't make these types of moves unless it's a major surprise, and that goes into something that I like to call the shock factor. When something happens that's not expected, that's when you get very volatile moves. If no one's expecting this drug to have this positive of data and they just blow it out of the water because their data is so positive, that's when things get super crazy. That's when we see 100% runs, massive short squeeze, etc., because of the shock factor. I talk about that in some other videos too, but shock factor is really important. Okay. Anyways, point is, I ended up swinging this over 124 with a price target of 130. They announced the offering. I was hurting, guys. Look at this pullback all the way to 114. I was down like two grand on it. But I was confident that after this offering passed, because the shock factor was so significant, because this data was so much better than everyone had expected, that I was very confident that buyers would step in and push this. My price target was 130. It was a massive trade for me. It took longer. It took about 6-7 trading days. It took longer than I would have wanted. In an ideal world, next day I wake up, it's at $1,000, and I retire. I'm done, right? Get those. If you ever have those dreams and thoughts like what if, get them out of your head. You'll never be a successful trader if you have those what ifs and thoughts in your head, okay? But make plans, take A+ setups. That's what leads you to being a successful trader, okay? Anyway, so that was SNDE. This was a rare example of when I successfully swung a biotech, but please just don't swing biotechs in general, unless you're in the trading room and I tell you why we should swing it otherwise. Okay, so here's some basic keys to swinging stocks. First thing I want to mention is, of all these stocks, let's actually go through them real quick. What is a common thing amongst all these stocks? Okay, take a look at this. Oh, I wish I would have showed the days before, actually. But if you could see the days before this chart, you'll notice it's on a very upward trend. All of these charts will go from the bottom of my left screen to the top right of my screen. And they almost always continue higher after I take my profits. You'll notice that to be the case. That's also a good sign of a swing trade. You might say, oh, shoot, I sold too early. Why didn't I take profits early? Get that out of your head too, okay? You should never sell at the top. Again, if you're selling at the top, you're being too greedy and you're getting lucky. That's not going to last, okay? But you'll notice that all these stocks that I'm swinging almost always continue way higher. So there's Target. Let me show you the next thing. Look at ACB. I traded this. I took like a chunk. Bought this overnight. Took profits at like, I don't know, 923 or something for a nice trade. Continued to 1038. That's another one that continued past my take profit. Take a look at this one. Look at this chart from left to right. Look how high that continued up to my take profit, okay? Why is this a common theme? It's a common theme because it means you're swinging, you're taking the right stinking setups. The right setups won't work just for a day. They're going to last for a couple days, okay? If you're trading the right momentum, if you're trading the right catalyst, and you're trading the right technical breakouts, you will always be selling too early, and that's a good thing. Get that in your head right now. And I know that's weird to wrap your head around, but again, if you're trying to sell at the top, you're wrong. Okay, you're getting lucky. Now, I will say, if watching these trades, I definitely could be more patient. Okay, and I agree. I'll tell you right now, my biggest weakness is I'm not patient enough at times. Okay, I'll just be totally upfront and honest with that. And just these swing trades are such killers. It's a good example of that. Okay, let me talk about next here. You'll notice. So the reason why I mentioned that is because I'm not dip buying stocks to swing. I'm not swinging reversals that have been down, and I'm hoping they just randomly bounce. That's not how you swing trade. You need the momentum and the chart and the bullishness behind you to push you higher and higher, okay? They always have strong momentum charts. Remember, these are the three things: momentum, catalysts, and technicals. What's the difference of them? Momentum is a strong, recent uptrending chart. It's volume. It's everything that we saw. Let me show you again. I'm sorry. If I'm making you sick from going back and forth from all these, let me just apologize. I just want to show you guys this real quick. This is that momentum I was talking about. Remember, imagine that wave. That wave just gets bigger and bigger, and the volume gets better and better. This is the definition of momentum, tied to this positive earnings catalyst, tied to the 1190 gap fill breakout, which I already showed here. Okay, it's just beautiful. I mean, this is like this is stock trading poetry. Okay, this is like a Robert Frost poem or Shakespeare or something. Okay, this chart is beautiful. It's like as good as it gets when it comes to finding something to swing. Like everything, this is like an A+ times a million. Seriously, I just absolutely love it. Okay, close your eyes. I'm gonna fast forward a couple slides. I don't want you to get sick again. I'll tell you when you can open them. Okay, there you go. Okay, so technicals. I'm sorry I didn't actually write the definition here, but technicals in that example I was talking about was a gap fill breakout. That's the example of a very nice, strong technical breakout. Those are the three pieces. Okay, the three main things you want to be paying attention to. But I want to talk about some more things. Okay, there's always more. The best time of day for you to enter a swing trade and for you to be looking for, well, that's not true. You should always be looking for swings. I look for swings at opening bell and say, hey, if this sets up here like this and this, that's going to be a good swing candidate. Always be looking for your swings, but don't enter them until about an hour to an hour and a half before market close. This is the best time for you to enter a swing trade. It's the time where there's going to be the least amount of fake outs. It's the time where you're going to get the best follow through in the power hour. Okay? I hate when people, we're 5 minutes into market open and they say, oh, I'm going to enter this for a swing. No.
Okay, there's 6 hours left of trading. What are you doing? So much can change. Okay, everything you're seeing right now could be totally non-existent 3 hours from now, right? When you enter at this time of day, you have a much safer, much smaller gap of error. Okay, you'll still have losing swing trades, I promise you, but this will lower and decrease the amount of losing swing trades you have. Okay, next up, I want to talk about this, and this is going to be kind of confusing. Notice 2 and 3. Wow, I have 2 threes. I'm so sorry, guys. I'm sorry. This is just poor on my part. I apologize. But anyways, 2 here. Stock is in the upper half of daily range. Okay, let's go look at an example to talk about this real quick. What I mean by that. Stock is in the upper half of daily range. This is a perfect example. Okay, so this is ASND. Remember, I bought this over this 124 level right here. Okay, the stock, you'll notice the stock is in the upper half of its daily trading range. So the daily trading range is here from like 104 all the way up to what, 126. So if you split that range in half, that's 104 to 126. That's what, $22. You split that in half. $11. This $22 worth of range. You want to be trading the upper $11 worth of that range. That's the upper half. Okay, that's another good sign that it's closing good and strong. Now I'm going to get even a little bit more specific about that and talk about how you want it to be in the upper half to 3/4. And this is kind of a vague number. My point is you want it to be upper half. I most likely, and as time goes on, I'm actually taking over high of day swings, over high of day breakout swings less and less. And I would encourage you to not do that very often because they just haven't been as good. In the past, a couple years ago, they were. You just take the high of day for a swing, high of day breakout for a swing, boom, it's money. It's just not been the case anymore. Instead, you want to find something that's just below high of day, that's breaking out over what I call a premature breakout level, which means it's still breaking out over important resistance, but not the main high of day breakout level. Okay. And then next here is just don't swing biotechs because the offering's likely. And we mentioned this. Now I want to talk about swinging TVIX. You know those bearish VIX movers, okay? I want to talk about when to swing them. Never. Don't do it. Now you might say you're such a hypocrite. You just showed me you had a winning swing trade on TVX. You're right, I did. There's an exception to everything. But please, just get in your head right now. Do not swing TVIX. Okay, I think I've swung this like maybe 5 times in the career of my trading, and it was in very rare circumstances. Just don't swing them. Okay, they're strangely they're not manipulated, but they're just strangely organized tools, I guess. Strangely organized ETFs or ETNs that are just weird, and they're just weird. Okay, just don't swing them. Let's just be clear about that. Some other things to not swing are biotechs. We mentioned that biotechs, especially up on big runs, companies love to take advantage of a 100% run to just do an offering and crush you. TVX, UVXY, don't swing. Now shorts. Notice I have these asterisks here. The more time goes on, actually more I'm swinging shorts, but please never swing a penny stock low flow short overnight. Never. Never, 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 ever, 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 never, ever, ever. Okay? Because if you swing a low float stock, say a stock's up 200%, you say, wow, this is total garbage. This is going to go back just like they always do. This is going to go right back to its price. This is a total pump. Well, guess what? You might be right 99 times. All you have to do is be wrong once, and you now owe your broker $200,000 because you made a massive mistake and you woke up to the stock. The stock made a move from $2 to $100 in 3 days, and you just got short squeezed and you're selling your house to pay your broker back. Don't do it. And I know that sounds crazy and dramatic. Just don't do it, please. Do not swing short these low float, overly volatile pennies. Okay, don't do it. Just please don't. Okay, awesome. Okay, so I hope this is helpful. These are just some very basic rules and strategies to talk about when swinging. What are the 3 things, guys? Momentum, catalyst, and technicals. Those are the 3 things you want to look for. What's the time of day we're looking for to enter the stocks? About an hour to an hour and a half before. Make sure the stock's in the upper half of the daily range. Make sure it has good catalyst. And I want to talk about more about this. Not just any catalyst. It's not just, hey, the stock released good news, we should swing it. No. It has to be a catalyst with legs. It has to be a catalyst that's recently working in the stock markets. One day, strong earnings winners might have legs for weeks, but guess what? 2 months from now, strong earnings winners may have no legs and be the worst possible catalyst for you to swing. Okay, it changes all the time. So ask yourself in recent markets, what types of catalysts are leading to multi-day runs? Okay, those are the things that you want to be asking. Right now, it is earnings. Earnings have been great things to trade and swing. They are. But guess what? A week from now may not be the case. Stay on your toes, stay volatile, stay careful. I hope this is helpful, guys. Real quick, I just want to go back to this page again. This is real, guys. What you're looking at here, this is real. These are real trades that I alert way ahead of time in our trading room. Okay, these are not just some BS fake things. Okay, these are real trades that I'm making and that I'm doing to be successful in the stock market. Okay, I make all these trades and calls way ahead of time. In fact, today I even said, hey, I have a swing pick coming today because I thought I did, but guess what? The setup dropped out. So I let everyone know, hey, sorry, the swing pick's actually not coming today. The setup that I loved just went from A plus to a B minus. We're not going to swing it anymore. And that's real trading. That's real, genuine trading. There's no pump. There's no BS. There's no fake stuff. These are real trades, real strategies that are working. So anyways, that sums it up. Thanks for watching this video. And look forward to trading with you in the future. Feel free to join us, free 1-week trial at kafinvesting.com. Oh, and go get your taxes done at caftax.com. Promise it's worth it. But yeah, head to kafinvesting.com, start a free week trial for us.